with how hard you work and your skill set, you'll be. They called them rainmakers back then. She's all, you'll be a rainmaker.
So how did you?
Yes.
How did you start ramping up business?
There is no way to replace a face-to-face relationship.
Everybody that's been in the business as long as you have these days has been through this big crash of 2008. Some people are saying there's another bubble happening.
So out of 500 salespeople, 499 were gone. I was the last man standing.
In hindsight, I actually think that COVID actually hurt my business. Even though we did crazy volume, but in the long run, I think it hurt.
I mean, I've got a client I was on the phone with this morning. They have 60 files in escrow because they focus on the purchases. They never varied from it.
An expert in the mortgage space today for you guys. He's been in the business for a long time. Jason Twiford, currently with Orion Lending.
Yes.
I'm in the real estate and the real estate of mind.
Hey everybody, welcome back to the Real Estate of Mind podcast. This is going to be episode 14. I'm actually really happy I've made it to episode 14. A lot of people don't even make it this far. I got an expert in the mortgage space today for you guys. He's been in the business for a long time. He's going to talk about his background and everything. Jason Twiford, currently with Orion Lending.
Yes.
It's been how long with Orion Lending, you said?
Almost 6 years.
Yeah, okay. All right, 6 years with Orion. Again, guys, he's an account executive, and he's going to tell us all about the mortgage business. We're going to go so we're going to start at the beginning, and then we're going to go, we're going to start with your background, and then we're going to go into the mortgage crash, because I know you got some cool stories.
Yes.
Yeah, I didn't get to live through the mortgage crash. I mean, I lived through the mortgage crash, but I was in college. I didn't get to work through the mortgage crash.
I was going to say, you're not that young.
Yeah, I was...
Your hair gave it away.
Yeah, I know. I actually started during the mortgage crash in the business. I started in 2008, so I didn't get to, and I was, a 21-year-old, 22-year-old trying to make money, and nobody was making money at the time, and I thought it was just normal. But I've seen people make millions and millions of dollars, so I was like, yeah, let me hop in this business. But anyway, we'll talk a little bit about that, and then, at the end, guys, we'll finish it out. Jason has some cool stories about his personal life, and he's originally from Alaska, so maybe we just get started there, your background, I guess. Where were you born, raised, and, how were you brought up and things like that?
It's a pretty cool story. Born in California.
Okay.
So I was actually born here, moved around a little bit as a young kid. Family moved to Missouri, lived there for a year, moved to Colorado for a couple of years. My parents split up and got divorced, and I moved with my dad up to Alaska.
Oh.
So that was a crazy move.
Very.
But looking back, you don't realize what you've got, what you're missing. I just thought that's what life was like.
When did you move to Alaska?
I think I was 10 or 11,
You're
10,
young.
11,
Okay,
12,
okay.
something. So lived up there for several years. Graduated from high school, couldn't wait to leave once I graduated from high school.
Just freezing and nothing to do.
It's cold, it's dark. It was
What part of
challenging.
Alaska did you live in?
So initially we moved to Anchorage, lived there for a couple months, and then relocated to Palmer, Alaska, which is about 40 miles north of Anchorage.
Okay. Kind of, I guess, a suburb. And why the heck would you move out to, I don't know, even further from this tiny city? Yeah, or not. Actually, Anchorage is probably not a tiny city. But
So it depends on your perspective.
Right.
By Alaska standards, it's not a tiny city.
No.
So Alaska encompasses about the western third of the United States.
Right.
So it's a huge state. And at the time, the population was about 500,000 people. So spread very thin. About 250,000 lived in Anchorage at the time. So not a huge population. There's probably more people within a 5 square mile radius of where we are.
Right.
But at the time, that was the booming metropolis of Alaska.
Yeah, and your dad did oil. That's the big thing out there.
Oil was a big thing,
Yeah.
fishing, tourism. He didn't really have a thing. He had been stationed up there in the Army, got divorced, wanted a fresh start, moved up to Alaska.
And then after Alaska, you headed back down to the States, huh?
So I graduated from high school, I was going to college in Minnesota. So I ended up doing my freshman year in Minnesota, played ball out there, came to California and stayed with my mom for the summer. And the light bulb went off. I'm walking around the beach and I'm like, yeah, this is home.
Yeah.
I'm not leaving.
Yeah. And what part of California were you in?
It's Southern California.
Oh,
So
okay.
city of Orange.
All right. Okay. So right here, that's cool.
Yeah.
And then you, obviously you tell me you're working some odd jobs in college, and you went straight into the mortgage business. How did you get into the mortgage business?
So my mom had actually worked for a mortgage company in the servicing department. So I graduated from college, went back up to Alaska, tried to start a business up there with my dad, worked there for probably 3 or 4 months, came to the realization that, they tell the story that you don't work with family because it never works out. I learned very quickly that this wasn't going to work out. I'm coming in with a college education, thinking we're going to run a business like it's a real business.
Right.
And he kind of wanted to show up when he would show up and work when he felt like working. So I didn't want to compromise the relationship I had with my dad because I was getting frustrated with how work was going. So I came back down to California and just thought I would try to figure out what the next step was. And it's kind of funny. So I had a degree in finance and economics, but this was in 1993.
Okay.
So a very bad job market. It was tough to get a job. My mom was like, hey, I could call somebody. She no longer worked at the bank, but she called one of her former coworkers that managed a servicing department. And this was it was like the craziest, most surreal situation. So I sent a resume over, and they said, okay, we need you to come in and take a test in the servicing department.
Yeah.
And I'm like, okay. And I'm not really sure.
Test about what exactly? Well, because you've never been in the business before.
I haven't been in the business. And it was really kind of a screening test to make sure. So I've got a degree in finance and economics, and I'm applying for a job as a cashier, which this is going back to 1993. People aren't paying their bills online. This is when you still mailed a check into your mortgage company and somebody had to open the envelope.
Oh, okay.
That's the job that I was applying for.
Yeah, doesn't seem too hard. But
it didn't seem hard. So the test was basically like a column of numbers.
Yeah.
So let's say the number on this side is, $1,234.56. You've got to be able to pick that same number out of the other side.
Okay.
So this is probably second grade level mathematics of just
matching.
I think it was matching. Maybe it's kindergarten.
Yeah, it's
probably put the circle with the other circle
my
type of
son's
thing.
doing stuff like that. He's 5.
Yes. Right. So I'm taking the 5-year-old test, and literally I'm in HR, and she goes through the test, and she looks at me and she's like, wow, you've done better than anyone's ever done on this test. And in my mind, I'm like, who is applying for these jobs?
Right.
So she's like, all right, you've got a bachelor's degree. You've aced our screening test. We really can't hire you for this position. And I'm now finding myself, because I'm sleeping on my buddy's couch, I'm finding myself begging for this cashier position. I promise I won't leave the company. I may try to find a new job within the company.
When, bachelor degrees were actually valuable back then. Now it's a completely different story. But anyway.
Absolutely. Back then, you created.
Like, wow, you have a bachelor's. It's like a big deal.
Yeah, it was a big deal.
Yeah.
I thought it was a big deal.
And they thought you were overqualified. Now they're just
massively overqualified for this position. And in reality, I was overqualified for the position, and they thought I would bounce as soon as I found a better option. And I genuinely was committing to stay.
So kind of just move your way up. You wanted to stay there.
Yeah, I'll stay. Like I said, if there's another better opportunity, something that may be more appropriate for my skill set, I'd love to go be able to pursue it, but I'll stay with the company. And she looks at me, and I felt like I was in a bar asking for a girl's phone number. She's like, well, I'll try to find a better fit for you. I'll give you a call. Yeah. And I'm like, I've heard this line before. I'm never going to hear from this girl. So it's a couple days later. I'll never forget this. I'm sitting on my buddy's couch, which is also my bed, watching a little Magnum PI.
Okay.
It's probably like 2:00 in the afternoon. And I get this phone call, and it's the girl from HR. And she's like, hey, I think I found something that's a better fit and a better opportunity. Would you be available to come in for an interview? And I said, well, I got, 10 more minutes of Magnum, so give me like 30 minutes and I'll pop right over.
Right.
So I go apply for a job as a senior loan counselor in their commercial division, which I have no idea what this is. I have no clue at all what I'm getting myself into. And so they explain what the job entails, and it sounds pretty interesting, and it's better than sitting on my buddy's couch. Right. So, they asked me to write a letter. Okay, so they give me this scenario with talking about modifications and assumptions, which again, I have no idea what they're even talking about.
Okay.
So write a letter to the borrower, letting them know that we've become aware that they have an illegal transfer and they're going to have to formally assume this loan. Like I remember this like I was still sitting there.
Yeah.
And in my mind, I'm like, I don't have any idea what you're asking me to write. So I draft up this letter
Yeah.
to the best of my ability based on.
There was no Chat GPT. I would hit Chat GPT.
Yeah, there was
now.
no chat. There was nothing. And
Yeah.
to make it worse, I'm in college. We're now using this cutting edge technology called Microsoft.
Oh yeah.
And I've got to jump into Word Perfect, which I've never even used, which
I remember
no
that.
longer even exists.
Yeah.
So I figure out how to write this letter, print it out, somehow talk my way into getting this job. And it worked out okay. And talk about just crazy things happening, God opening the right doors for you. The whole company is located in a building over in Orange. Mm-hmm. And the entire company's on, like, let's say the 3rd and 4th floor. We're this outlying group that's on the 9th floor. And there happens to be one other guy on the 9th floor, which I've never even been introduced to, but I'll just periodically see him. So we happen to be passing each other in the hall. And he's like, hey, you're the new guy. Yep. We start talking. And I did my undergraduate at Chapman University. It just so happens this guy went to Chapman.
Okay.
So
cool.
we kind of hit it off. He's like, hey, why don't we go to lunch one day? So we go to lunch, and he's like, what, how's work going? And I'm like, well, it's cool. It's a
right.
job. It's basically, they give me a list of things I have to do. By 10 o'clock in the morning, I'm done.
Yeah.
And he's like, well, I could use some additional help. Do you want to come and work on some special projects for me? And I said, absolutely, but is my boss going to get upset? And he looks at me and he's like, do you know who I report to? And I said, no. He said, I report to the owner of Long Beach Bank at the time, which became Long Beach Mortgage, which was also AmeriQuest Mortgage.
Yeah.
It later became acquired by Washington Mutual. We became the subprime division of Washington Mutual. But the company was started by a very dynamic entrepreneur who opened a bank to gain access to capital for his own personal joint venture projects, which, then you saw the whole savings and loan crash, which that's because people were doing that the savings and loan crashed, but nevertheless, super smart guy. The guy that I worked with created amazing opportunities for me and really helped kind of shape the direction of my career. I ended up on a special project. Again, it was like we were kind of the special forces of the bank, where if there was a problem, if they had asset issues, his job was to go ahead and figure out how to resolve it, whether we liquidated it, foreclosed on things. Long story, but very cool opportunity.
Yeah.
That, thank God I had to go to the bathroom at the right time, and I caught this guy in the hallway, and we ended up having lunch together.
And that's how it started, huh?
That was how it started.
Thing like that.
And then I ended up, we were trying to sell an 82-unit apartment building in Hawthorne.
You're selling as who are you in the transaction?
We basically
You're the bank,
financed
though.
it. We ended up foreclosing on it. So now we're the owner of the building.
No, you're not. It's an REO now.
Yes. So one of the many things that we took care of was liquidating all of the REOs. And it was all commercial and multifamily REOs. So really, like going from writing stupid letters to being
matching numbers
to being in a situation where I'm instrumental in helping sell these multi-million-dollar projects. It was a really cool transition in my career. But I ended up working with the marketing department, and the head of the marketing department looked at me one day and she's like, "Why aren't you in sales?" And I was like, "Well, I don't know." And the bread and butter of the organization was wholesale lending. So I got to talking to her, and she was like, "Why don't you head over and talk to them about getting into the sales side of things?" And I'm like, well, that's where all the young people driving Mercedes and BMWs are, right? She's like, yeah.
Yeah, you want to be
She's
there.
like, I guarantee you, with how hard you work and your skill set, you'll be, they called them rainmakers back then. She's like, you'll be a rainmaker.
Because you make it rain?
Because you make it rain.
Okay.
That's exactly what it was.
All right.
So I said, okay, yeah, I'm interested. So I went and talked to him on the sales side. Like literally, I sat down with them. I've spent about as much time with them as I have with you right now. And they're like, we've got a job for you. We have open territory. And
This is not at the bank?
This was through the bank. The bank did wholesale lending.
Community?
And yeah, so Long Beach Bank was going through a transition where they were reorganizing as a mortgage company. So the banking regulation was becoming much more strenuous and restrictive. So they said, you know what, we're better to operate as a mortgage banking organization than a bank.
Yeah.
And so they had already made the transition. They were shifting where there was going to be a separation between Long Beach Mortgage and AmeriQuest, which was the balance of the company. So without getting into all the boring details, it boiled down to it's so surreal. You know, I started with a really crappy job straight out of college. So I'll never forget, 1993, they're paying me $22,000 a year. And I feel like I'm doing okay.
I think that's okay for 1993. I mean, that's probably like, I don't know, 50, 60 today.
Probably not even that much, but it was
Maybe, I
bad
don't
then.
know.
But hey,
It's 30 years ago.
compared to being unemployed,
Yeah.
it wasn't a bad option.
Oh, that's great.
So, and I had done well. I got good reviews, got some promotions. Now, 2 or 3 years down the road, I'm making 30 grand.
Ooh.
Okay, so I feel like I'm
Balling.
I'm balling.
Yeah, hell yeah.
Look out, world. I'm balling.
Mercedes,
So-
here we come.
No, Nissan Altima, here we are. But it was new, so it was like the biggest accomplishment of my
Yeah.
life to be able to drive a new car that didn't break down all the time.
Yeah.
So, true story, when I was in Alaska in high school, I had to carry a spare battery in my trunk because my car would break down so frequently and it was so cold that I would often have to get out and jump myself.
Oh my
So it literally did get to the point that I had a milk crate with a battery and jumper cables in it.
Oh, I'm sure you had a lot of cold stories, basically.
Oh, it's
Yeah.
brutal,
Yeah.
very brutal. But so I've got this opportunity to make the transition into sales and become an account executive. And so I go back to the guys that had really been instrumental in growing my career, and I said, "Look, this is the opportunity. What do you think I should do?" And I'll never forget. And I appreciate it so much because if they would have said, "We think you should stay," I worked. This guy's name was Kurt Christensen, total stud. He was the guy that went to Chapman also. And then a guy that he previously had worked with ended up joining the company. I worked with them, those two guys. And literally, if they would have said, "We want you to stay with us," I would have done it without thinking twice.
Without staying on the commercial side.
Staying on the commercial side, yes. And they said, "Look, if you want to stay," yeah, and mind you, I'm making 30 grand a year.
Yeah.
They said, "If you want to stay, we'll bump your salary. We'll put you on salary. We'll pay you $50,000 a year."
Oh, wow.
Okay.
It's a
At
big
the time,
jump. Yeah.
I felt like $50,000 was all the money in the world.
Yeah.
I literally was like, how could I possibly pass up 50 grand a year? When I break it down,
That's
it's
pretty
like,
good, though, for 95 probably by now, 96?
yeah, 96.
Yeah.
So, but they looked at me and said, "You know what? If you don't try this, you will always regret it." So the $50,000 is on the table, but you need to go do this job.
Yeah.
And I think they saw that there was potential in that. So
Those are good guys. You need guys like that in your life.
You need mentors like that. I look
Yeah.
at it. I mean, they were the kind of guys, if I showed up to work at 6 a.m., I was the last one there. They were already there hustling. If I left at 6 p.m., they were still grinding. So it ingrained this work ethic of just this relentless drive to be successful and to do what's right for the company and to really just focus on growing your business, all of which were really instrumental traits into being successful when I made the transition to becoming an account executive. So I decided to make the jump. I went back and forth. I'll never forget it. I'm sitting with a buddy of mine, and he's telling me, he's like, "You're going to kill it in sales. You need to go do this job." And I'm like, "But $50,000 is all the money in the world, it seems like to me."
Yeah.
And that was, $4,000 and change a month, a little over $4,000 a month.
Right.
So I make the jump. They were going to put me on this guarantee for a period of time. And I'll never forget my first day on the job, first day on this new job. I'd come from a commercial and multifamily background now of a couple years in the real estate world. And literally, there's no training back then. Somebody hands me a loan file, and this is before things were paperless. They literally hand me a loan file,
Yeah.
and they said, "This was my training. Go look at the 1003. You know what my question was?
What's a 1003?
What's a 1003? I didn't even know what a 1003 was.
Yeah.
So, I go sift through loan files, picked up the business pretty quickly.
So they put you into this AE position. They didn't even describe because I was going to say, for some people out here, what is an account executive? Did they describe it to you?
So they did describe it to me. So basically, to answer your question, what an account executive is,
Yeah.
it's
In the mortgage space. 'Cause
It's
there's-
really an intermediary entity. So my clients are mortgage brokers and mortgage bankers. So you're a mortgage broker, you're a mortgage banker, you bank some product, you broker product out. If somebody comes to you and they want to borrow $1 million, so they want to borrow $500,000, you're not writing a check out of the company bank account to cover that $500,000 or $1 million.
Right.
You want to work with a company like mine, like Orion Lending, which is set up with relationships with all of the agencies, Fannie Mae, Freddie Mac, HUD, which does VA loan or FHA loans, the Veterans Administration, which also falls under HUD, USDA. We've got relationships with agencies on Wall Street, so we can do all of your non-QM product. So we're kind of that middleman that provides the capital and the funding and the relationship access to the loan programs you want to offer to the consumer. So my job as an account executive is to understand what my programs are, go door knocking, and there are various ways of trying to build relationships with mortgage brokers and mortgage bankers. Back then, it was much more jumping in your car and driving around. You couldn't email. You didn't want to sit around just making phone calls. So I learned the hard way. I would wear my shoes out. I'd get in my car. This is back when you had phone books. I'd pull out the phone book. I'd look up mortgage or real estate loans in the phone book, figure out where all these guys were, and I'd just go walk into their office and show up and say, hey, I'm your rep with Long Beach Mortgage. Here's why you want to work with me. And I would then try to build that relationship with those clients, those mortgage brokers and mortgage bankers, and just develop and grow the business. So literally, I started in May. May was when I made my transition to become a wholesale account executive. My guaranteed pay lasted up through July. August, I went straight commission. And I'll share with you, not to throw numbers out, but this was me thinking $4,000 a month was all the money in the world. My first month on straight commission, I made $14,000.
Nice.
Then I felt like I knew what all the money in the world was. I was like,
I'm sticking to this, baby.
Why in the world was I so afraid to make the jump and come over here and become a salesperson?
Well, I mean, to get that $14K, that's not, I mean, that actually, honestly, it seems like all of a sudden that's only 90 days, right?
Yeah.
And that's actually, so in the mortgage business, obviously that's technically 60. So those were deals that were submitted, actually, and then by the time you got paid, so you're talking about, could be deals that are like 45 days into your tenure. So how did you start ramping up business? You're saying just the door knocking and all that kind of stuff?
I just went, they literally, it was funny because when I went in and talked to them about this job, they said, we're offering you a job right now. We have a territory available in West Covina.
Go get in your car.
Yeah, pretty much. And I was living in Costa Mesa at the time. I'm like, I'm living the good life. I'm living down by the beach.
Right.
They're like, we have a territory in West Covina. I'm like, great. Where's West Covina? Yeah. I mean, can I get there in a day? I have no idea where it is. So I figured out where West Covina was very quickly.
Yeah.
And they gave me just a list of brokers that were already approved, some producing, some not producing. I took over a territory for somebody that was doing on average. So literally when they gave me the list, I then went and did research on all of these brokers, figured out how much business they were doing with Long Beach Mortgage. And I went to my sales manager and I'm like, hey, you're telling me I got this tremendous gold mine territory. I said, this account executive that was here before me, she was averaging about $2 million a month in fundings, which on the wholesale side is not a lot of money. Not a lot of volume.
It's okay especially for back then. I mean, especially.
But I'm like, $2 million bucks. That's not really seeming like this gold mine. And she's like, nah, she didn't maximize the opportunity.
That's just one account.
No, that wasn't one account. That was the whole territory.
That's her whole. Oh, okay.
That's West Covina.
Yeah.
That's West Covina. It branched out a little bit more.
And Long Beach is a big at least from what I remember. From what other people told me, I wasn't even in the business. They said it was a really big company.
It was a big company. It was a major player. It was the first company to securitize subprime mortgages.
So $2 million for a Long Beach mortgage is
$2 million for a Long Beach mortgage rep was not a lot of money.
Yeah, man, only $2 million bucks. And so it's different back then. They gave you territories. Now you can do whatever you want.
Now you go.
Now it's
my
free
territory
game.
is the United States of America.
Yeah.
Back then, literally, my territory was Covina and West Covina, north of the 10 freeway. So literally, I was boxed in.
And then
I could go from
east
from
of the 605
to the 605,
Yeah.
and then east to the 10/50 to the 57.
They did give you direction, though, because then you're like, these are the people I have to contact.
Right. I was in a fixed area. I had to go dominate that marketplace.
And if you get somebody outside, you have to give it to the person who is assigned to that territory.
Yes. Or beg and plead. I mean, it's still kind of like that to a great extent. Where
let me have this account, please.
Can I please work with this guy? But yeah, it was interesting. It worked out really well. That was.
So you went from $2 million. What happened after that? I mean, after you got the account.
So what was cool is I took over that territory, and the revenue being generated on subprime mortgages back in that era was astronomical. I mean, margins we look at today are less than a point. So you've really got to do serious volume as an organization to make money.
Right.
Back then, the margins that we were making was, 4 or 5 points, upwards 6-7% in some cases. I mean, it was just astronomical.
Right.
So I remember when I started, they had a sales contest going. So they had a sales contest that was going to go to the Super Bowl. And I'm a sports guy. You're a sports guy.
Yeah, hell yeah.
So you dangle the carrot of, I'm going to get a ticket to the Super Bowl if you win this contest. And they had different categories.
Yeah.
So they had sales manager category, they had veteran categories, and they had rookies. Rookie was anybody that had been in the business less than 6 months. So I mean, this sales contest probably started in August, started right around the time that I was starting to hit a stride. So I ended up winning the rookie contest, finished first place. And
you got that 14 grand and you got a Super Bowl.
I got that 14 grand. Not only that, this was the Super Bowl down in San Diego, Qualcomm Stadium. I'm a diehard Broncos fan.
Oh, okay.
So this is the Broncos going to the Super Bowl. So not only did I win the contest, not only did I get to go to the Super Bowl.
When they were good, yeah.
My team is playing in the Super Bowl. Now, granted, they've never won a Super Bowl. They were kind of like the Bills, where
at the time,
they were the Bills at the time, where like 0-4 in the Super Bowl, and they're playing the Packers with Brett Favre and that monstrous team.
Yeah,
the Packers are massively favored. So I head down to San Diego. We end up staying in a hotel that had some players in it.
Cool, that's cool too.
And I got, it was for me and a guest. So I took a buddy of mine, and he happened to get into the mortgage business. So
after he saw your check,
yeah, he got in the mortgage business.
Oh my God!
He's like, I'm in. So he's now one of my customers.
Okay.
I got him set up with one of my brokers. So it was a pretty cool story. We had talk about a great experience, a great initiation into what the mortgage business had to offer. We're walking out of the hotel, and my buddy is like, that's Jamal Anderson, who was at the time all-pro running back for the Atlanta Falcons. I didn't recognize him, and it turns out that he had been on Oprah on some show about what it's like to be a famous athlete and single. So my buddy is like, dude, I saw you on Oprah. And the guy's like, really? Right on. What are you guys doing here? We're like, we're here for the game. And he's like, hey, I'm having a party up in my suite. You guys want to come? So all of a sudden,
wow, that's random.
4 months ago, I'm driving around in my Nissan Altima, making $2,500 a month.
Yeah.
Fast forward 4 or 5, well, at this point, probably 6 or 8 months.
Yeah.
I'm up in a suite at a party with Jamal Anderson.
Some NFL guys.
With some NFL guys.
Yeah,
with Belle Biv DeVoe. I mean, it was pretty fun. It was pretty wild.
What a turnaround.
Yes.
That's great. Now, I was just thinking about this guy that you were working. So this was 25 years ago, right? Are you working with anybody today? You've got basically?
What's crazy?
Yeah.
The bulk of my big accounts are people I've been working with for probably 15, 20, 25 years.
Oh, that's amazing.
So my kids are in college.
And they're still in business.
And they're still in business. Yeah. Yes, absolutely. And doing well and never left the business. They're still thriving.
Oh, that's really good.
Yes.
Yeah, that's really good. Now, I know, obviously we talked a little bit earlier before we started, but is there anything else that you'd rather do than being, in the mortgage business right now?
I'll be honest. This has been, having just kind of stumbled into it and having crazy opportunities and doors opened to me. I think this job is what I'm absolutely suited for. There's really nothing else I would prefer to do. I love my job. I love the guy. I love learning the guides, putting people in homes. I work with some really cool people. I get to hang out with guys like you.
Yeah.
And
thank you.
He owes me lunch on that one. But it's been like a lot of these people have become your family and friends.
Right.
What's cool now is I work with a lot of my clients where 20 or 25 years ago, they'd be at the office with their kids this tall running around. Yeah. And now those kids are working with them and they're in the business.
Yeah.
And it's just watching them grow up. I mean, a lot of my clients, I worked with before I ever got married the first time, before my kids were born. My clients have seen my kids grow up, and vice versa.
Yeah.
So there's nothing I would rather do as an adult career Oh, I would absolutely.
This is
what
it,
I'd like
huh?
to do
Yeah.
is win the lottery, and then I could just pursue all of my passions.
Right.
If I've always joked that if I didn't work in the mortgage business, I'd be a hunting guide. But when I talk to hunting guides, they're like, we hate this because we used to love to hunt, and now when we do this for a living,
Yeah.
it's no fun anymore.
I have no idea. I literally have no experience in the hunting area. So
When you're ready to go, we're going to go out and hunt.
I mean,
we could just go shoot. We'll start there.
Oh, I'm ready. I mean, I'm ready to start shooting at least.
Okay.
But a little back to you. Like, obviously, you're one of the top guys in the business. Obviously, congratulations on that.
Thank you.
But I talk to a lot of AEs because that's just what I do. I talk to
Right.
AEs, right? So a lot of people want to be in your position. What advice would you give to another account executive, especially in today's market and even beyond today's market? Because you've transitioned from, paper mortgages now to paperless mortgages. I guess we can talk about a few things. Number one, how did you make that transition? And then what advice would you give?
Well, the transition's just, it's the evolution of technology in our industry. So I started out when you had to go drop a file in a transbox. Most people don't even know what a transbox is. And
I've only heard about it.
30 years ago, there was a transbox. I mean, you would have had transboxes on this building, guaranteed. There's other
Yeah.
mortgage companies in here. You literally, every company, so Long Beach Mortgage had its own transbox. It was 667 was the number, and they were orange. So
Okay.
companies had a color and a code and a number, and that was how you got your file to the lender. You'd go dump, if you had 3 files to send out to 3 different lenders, you'd put a loan file. You literally had to make a
who
copy.
transports these packages?
So there was a third-party vendor called Transbox, and they
Oh,
would go put the box on, and then they'd come at, let's say, 10 o'clock at night, so you knew that the
What happened to
Transbox,
FedEx or like
too expensive.
UPS, all that
Yeah,
stuff?
no, Transbox was like exclusively for the mortgage industry to get
got
loan
it.
files delivered. So you'd go drop, 3 envelopes in the Transbox. You know that Transbox picked up at your building at 10 o'clock.
Mm-hmm.
And people worked crazy hours back then. The business was insane.
Yeah.
And so, you would drop it in at 10 o'clock and it would go to a centralized location and they would take all the 667 orange Transboxes going to Long Beach Mortgage and put them in a big bag. It was like a huge clear trash bag.
Mm-hmm.
And then they'd get dropped off at like 7 o'clock the next morning at Long Beach Mortgage.
Oh, wow.
So literally we'd go open it up and loan docs would get sent via Transbox. It was crazy.
But what about conditions and how long would a file
Fax
take?
machines. So
Oh,
you
fax,
could
okay.
fax things in.
Yeah.
I had a fax machine sitting on my desk. I mean, it was...
You could barely read it. It's like coming
Oh,
through.
yeah.
Like,
Oh, no. I had a really fancy one where it wasn't the thermal roll paper where you took it off and it was
Yeah.
then the whole thing rolled up. I had real paper. But it just... Things evolved.
Yeah.
But I think getting the second part of that question was,
How'd you get to the top? What advice would you give to people that are trying to
Really-
get there? Everybody's trying to get to the top.
everybody
so-
wants to be at the top.
Right.
Here's the thing. Everybody wants to be in your spot. Everybody wants to be at the top, but they're not willing to do what it takes to get to the top. You know what it takes? It's old school mentality. You work your ass off. You work hard. Oh, sorry
Yeah.
about that. We can
Yeah, you're
filter
good.
that out. But
No, you're good.
you got to work your ass off to get to the top.
Mm-hmm.
And once you get to the top, now everybody's got a target on your back and they want to take you out. So you've got to work even harder to stay at the top. You've got to study
Yeah.
the guidelines. You've got to become an expert on the guides. You've got to build that rapport with your team. I'm very fortunate from the standpoint that my production has warranted setting me up with my own operations team. My underwriters are fantastic.
Mm-hmm.
But they're fantastic because I got to pick them and we built that relationship with respect. I don't come to them and say, I need you to clear this condition. And they say, why? Well, because the broker said they're going to pull the file if I don't get this condition waived. And that's what a lot of AEs, that's the level of value they bring to the table.
Mm-hmm.
And I've had this conversation with my underwriters. They value and appreciate the fact that if I come to them and I need something waived or I want them to recalculate income, I'm coming to them with a solution to whatever the problem is because I've read the guides, I understand the guides. I don't attack them, I don't challenge them. I just tell them that I've got a different interpretation and sometimes we agree, sometimes we don't agree, sometimes
Right.
we escalate it to someone else. I mean, and it's,
Yeah.
like I said, I've been fortunate that when you build your career and your reputation on doing the right thing, treating people the right way, and knowing what the guidelines truly are and what we can, I don't want to say get away with, but how far we can stretch things.
Yeah.
People are comfortable.
Or how we can structure files. That's how I've.
Well, that's
pretty
it. You've
much-
got to
yeah.
structure them the right way. I mean, I've had low credit scored, what a lot of people would look at and say is a bad file,
Mm-hmm.
run seamlessly through the system. I've seen a greater number of what you would consider to be a good file, high credit scores, low debt ratio, become complete train wrecks because they're put together the wrong way. They're just not packaged up and presented in a way that's going to make sense.
So yeah, you're just telling people to grind, essentially. Just go out there, old school mentality.
Go out and work hard.
What about visiting brokers? Or you think
I started in the wholesale arena in 1996, and I started getting in my car and driving around. And I think that there is no way to replace a face-to-face relationship. There is more value in us sitting down, not just on your podcast, but sitting down and talking about files.
I think it's true.
A lot of AEs have gotten to the point they just send out a blast of emails. I send out emails too. I sent out 52,000 emails last month. But I've got an assistant that handles all of that marketing for me. We send out 52,000 emails. But the goal of those emails isn't to get you, odds are you're not going to send me a loan because I sent you an email. The goal is to get you on the phone because you saw something on that email that interested you or intrigued you, or you've got a file that we may need to talk about to be able to find a way if we can put it together. So yes, I still... I have 100 and some thousand miles on my car because I get up and drive every day.
So you're still out there going to broker offices?
My goal is to be in the field 5 days a week. Absolutely.
Yeah, because you have a team behind you that's kind of handling everything now that you're at the place where you're at now, like you said.
Yes. So it really does afford me the opportunity to be out hitting the streets. And for somebody that's newer in their career, if they were getting started, the best advice I would have for them, one, read the guidelines. Know the guidelines as well, if not better than your underwriter. Because if you know the guides as well as your underwriter, you're going to have a conversation with them where they're going to respect your knowledge, and they're going to be comfortable having that conversation with you and working with you on files.
Yeah.
There's number one. Number two, go grind. Because I guarantee if an AE comes into your office and you sit down and talk to them, within the first 2 minutes, you know if this AE knows what they're talking about or if it's their first month on the job and they don't have a clue what they're...
I hate when they don't know the guidelines. It's like, so this is a product you're selling. If you're selling a vacuum, a knife, if you're selling a basketball shoes,
Right.
These shoes come in this color or this, the vacuum does this, and this. And then I'll ask them little stuff like, what are the reserves on this? How high is the LTV? What's my debt ratios? General things that you should know about each product.
And if they don't know that, right, is that really somebody you want to trust your paycheck with?
But it's also like you said, there's not a lot of in the account executive, the wholesale mortgage space, there's not a lot of training. So they have these account executives, they just have to, but I'd be able to do it too. I can read the guidelines, I can figure it out, then I got to start calling brokers.
Well, and the one thing that I did, because I didn't know the guides perfectly when I started, but if we sat down and you asked me a question, what's the DTI, what's the LTV? I'm on my second bag. The first one fell apart. Literally, I said I'm going to invest in myself. I bought a Toomey bag. I bought a nice Well, I started out with these Target bags for a couple years.
Yeah.
But then when I was consistently making money, I bought a nice Toomey bag. It got to the point the handles were worn out. It literally was falling apart. My wife looked at me one day and she's like, "You can't go into offices with this piece of crap bag because it's embarrassing." So Toomey had a policy where literally you could send it in and they would refurbish it. I sent my bag to them and they sent me an email that said, we can't even fit. We're not even going to touch this. We'll just give you a credit. Go buy a new bag.
Yeah.
So I bought the new bag. But I carried a big 3-ring binder with all of my guides, with the matrix, everything, every resource that I thought I needed. I had it with me. So literally, if you said, "Hey, what's the reserve requirement on this program?" The basic stuff I'd already memorized. Some of the more detailed stuff, I'd be like, "Hold on," and I'd pull it out and I'd be looking through it. And initially I was concerned, are people going to think I'm an idiot because I don't know the guides? But I realized really quickly that loan officers valued the fact that, one, I had all the resources with me. I would sit down and go through it, show them, talk to them about it. If I didn't have the answer, if I couldn't find the answer, I would tell someone, "Hey, Andrew, I don't know, but I'm going to find out. Give me until 2 o'clock this afternoon. I will call you back before 2 o'clock with the answer." And as long as I was very consistent and called back before 2 o'clock with the answer, I had no problem telling people I didn't know.
Yeah, well, that's another thing, time management. A lot of AEs, they don't call back. Like you said, you were going to call back just right now. So
right.
Yeah, they miss that part of it. So yeah, you're saying just have the guidelines, know the guidelines, hustle.
And here's the thing, work 8 hours a day.
That's another problem these days. That's a huge issue.
Yes, it amazes me.
Huge issue.
People will punch a clock to make slightly more than minimum wage. But you've got opportunities to make 7 figures in this industry. And people just won't work. And that's where I really credit those two guys that I started my career with before I made the transition into sales. I became accustomed to working 12 hours a day. That was what I did. And I wanted to further my career. I wanted to have opportunities. I wasn't married, didn't have kids at the time, but I knew I would want a family and would want to be able to provide for my family. Mm-hmm. And it became ingrained in me very early on that that's what you do. You bust your ass and you work hard. So then when I had the opportunity to really have total control over my pay, and all of a sudden it became clear that it's like, okay, well, if I work 8 hours, I'm going to make X amount. But if I stretch it and I really bust ass and I work 10 hours or 12 or 14, it got to the point I really had to put some limits on it.
We don't want to burn you out, though. Yeah, we don't want to.
Yeah. Because this was back in the era where the business was going crazy. It was leading up to the big crash. So literally, if I drove by a client's office at 10 o'clock, lights are on, people are in there working files.
Yeah.
Now, they may not have showed up until 2 o'clock in the afternoon to start their day, but literally, if you wanted to make sales calls until 10 o'clock at night, you figured out which offices were still working. I could make sales calls from 9 a.m. until 9 p.m.
Mm-hmm. Yeah. And I know you just mentioned one of the big crash. Yeah, so we haven't talked about that yet. So I'd like to get a little bit into that because everybody that's been in the business as long as you have these days has been through this big crash of 2008. Some people are saying there's another bubble happening. I mean, I have different thoughts about that. But, what are some interesting stories or what was your experience during that 2008? Because Long Beach went down, right? Long Beach was one of the because it was a big player, it was also one of the big players that went down.
We were a major player that went down. And I looked at it for a long time like we were the subprime division of Washington Mutual. So we were basically kind of a separate entity within the savings and loan institution.
Were you owned by them at the time of 2004, 5, 6?
We were acquired probably in 2002, 2003-ish, somewhere there. So yes, absolutely. And WAMU was a fantastic company. I'd still work for Washington Mutual had they'd still be seen around. A different outcome.
Yeah.
But so as things started to become challenging in the marketplace, the subprime industry just blew up and took over.
Well, really quickly, how long did loans take to close? Because I wasn't in the business really. And we're doing like fax machines. Like how are we still doing 30 days?
We were still closing in 30 days. Absolutely. Okay. We could close in less than 30 days. We could put a rush on a file, and very quickly I had established having my own team even back then, even in probably maybe not the late 90s, but certainly by 2000, 2001. Mm-hmm. I had my own dedicated team of support people, and they were awesome to work with. But it affords you the ability to control your own destiny. And I never took advantage of it, but it allowed me to prioritize files, prioritize the process flow, create priorities on a daily basis. Mm-hmm. But it was nuts. So we were the subprime division for Washington Mutual.
Yeah.
It was really probably the subprime industry as a whole that was the major contributor.
And when you say subprime, let's kind of get into that. What is a subprime mortgage? What makes these loans subprime?
So subprime would be, anything less than prime. Prime being Fannie Mae, Freddie Mac, FHA type of loan product. So the guys that started Long Beach literally pioneered the subprime industry. They began to make loans to people that couldn't qualify for a Fannie, Freddie, FHA loan. So at the time, it was somebody with recent bankruptcy, recent foreclosure, mortgage lates, higher risk loan, higher interest rate, greater equity position required. Yeah. So that's really where subprime started. I think subprime had a really valuable place in the industry.
It still does,
It does. But what we saw happen was this evolution of subprime, where all of a sudden subprime isn't necessarily those, B, C, D grade customers with bankruptcy, foreclosure, mortgage lates. Now it's opening up a channel for alternative income documentation. Because at the time, Fannie, Freddie, FHA, they wanted W-2s, pay stubs, tax returns, really standard packaging documentation. Mm-hmm. So all of a sudden, we start to see the bank statement programs, a W-2 and pay stub with no 4506 to validate transcripts.
I know what that means.
So what came with that was an astronomical jump in mortgage fraud.
Right.
And I think that more than anything, more than the subprime stigma itself, making loans to less creditworthy borrowers, it was the fraud that put people in homes that couldn't really afford to qualify for homes. I mean, I know we've talked about this. You've seen the movie The Big Short.
Right.
It is spot on with what was happening in the marketplace. You know, and they had this one scene where literally we were doing 80/20s. That was the premier subprime product.
100% finance.
100% financing. We could do it stated income. We could do it with bank statements. We could do it with tax returns, W-2s, pay stubs.
Sounds great.
We didn't validate any of the tax returns. And that was industry standard. That wasn't just,
And you're getting, at the time, you're getting comparable to the A-paper rates?
You're getting comparable to A-paper rates. Now, A-paper rates, let's say they were at 4.5% on a 30-year fixed. I'm giving somebody maybe a 4.5 or a 4.25, but it's on a 2-year fixed with a 2-year prepay. So now there's an even greater level of risk and volatility associated with the type of product we're putting these borrowers on.
Yeah, because they're about to balloon.
And then they turn into a 6-month adjustable, and the payment, there's a very aggressive first adjustment. So the payment can go up. In some cases,
so the whole point was to get out of it.
The point was a Band-Aid loan. In 2 years, you're going to be in a position to get this great Fannie Mae loan.
Because the equity was just going up like crazy. Yeah.
Oh, and equity was going up like crazy. And what we saw is there we were contributing to the bubble. Mm-hmm. People were qualifying for loans that didn't have the financial ability to make these payments.
Right.
You know, certain loans stand out. Literally, I remember doing a loan for one of my clients. So she's been a loan officer now for probably 6 months. Making a whole lot of money, reportedly, in the mortgage industry and real estate, buying a $600,000 home, stated income. I remember looking at her credit report. She had one trade line with a high credit of $50. It was a Sears account.
Okay.
And, you know, coming from a background where I had a degree in finance, by this point in my career, I'd finished my MBA. I've got a master's degree. And I'm looking at these loans, and I'm getting paid to go originate these. And if I don't do these loans, there's 10 guys lined up behind me that are willing to do it.
Right.
But I'm looking at these loans and I'm like, why are we making this loan to this borrower? She has no history of paying anyone. We're doing 100% financing. She's new in the business, new in the industry. The income's not substantiated.
They're just coming in with closing costs?
We didn't verify any money. We don't know where the closing costs came from.
Oh, yeah.
So but, you didn't have, there was no reserve requirement. And you didn't have to come in with your own closing costs. So if you structured the deal correctly, as a realtor, you could get 100% financing. The seller would pay all the closing costs. Borrower would come out of pocket with basically nothing.
Sounds good. Get me a new house.
And what's crazy is the rating agencies. So we're selling these mortgage-backed securities on Wall Street. And you've got pension funds and hedge funds buying into these because you've got rating agencies. And there was one scene in The Big Short where they're having a conversation with one of the rating agencies, and it's like, look, if you don't give us the rating we need, we're going down the street and they'll give it to us. And it's like, okay, we'll give you the rating.
Because they want the business.
Because they want the business.
Yeah.
And there, I mean, you look at, we've got 4 to 7% spread, and we're doing billions of dollars a month in production. Mm-hmm. Billions. I mean, that's more than some companies are doing annually now.
That's what you guys were doing?
That's what we were doing just in the subprime. We were doing in excess of $50 billion a month as an organization as a whole.
Holy hell. Okay.
I mean, the numbers were staggering.
So you were probably the number one company in the country.
We were one of probably the top 5 originators in the country.
I would think so. That's a giant number.
I mean, we were the largest savings and loan in the country. Mm-hmm. And from a subprime perspective, we were one of the top. The organization as a whole, because Washington Mutual's niche was the option arm, which you talk about another high-risk program. It never fails to amaze me how the consumer thinks that banks make loans for free. And that's what the option arm was. We'll save our comments on the viability of an option arm, but people could basically make less than the interest-only payment and create a negative amortization where they're deteriorating their equity with each payment that's made. So,
but in their minds, they can afford it because there's an option to make a very small payment.
Exactly.
They're not late. Yeah.
Right. I can get this $500,000 home, and my payment's only $800 a month.
Oh, terrific.
Fantastic. I'm living the American dream until it became the American nightmare. But, a lot of contributing factors that led to, this bubble bursting. Mm-hmm. And when it burst, it burst quickly. Subprime was basically shut down. I'll never forget it. I was in the process of buying a new house, buying a really expensive house. I lived very conservatively. was very, saved a ton of money. This was my one big purchase. And bought new construction, took a year and a half to finish. And I'm supposed to close escrow February of 2007. And I can already see that the market is starting to change. So by April,
how so? What did you see that was like kind of triggering your mind?
A lot of instability. So we hadn't really seen things slow down yet. But there was a lot of talk, a lot of competitors really starting to struggle. There were talk that one competitor in particular was going to go out of business, and it just became a little bit unsettling.
Yeah.
You could just tell the vibe was different in the industry. We went from life's going to be great forever to maybe there's, an end to the road.
That's kind of what we just saw right after COVID. So,
right.
I mean, not as bad off. It's not even close, but similar. I know what you're
just
talking about.
Just a similar dynamic where things are changing.
Yeah.
So
this is February 2007.
February 2007, April 2007, I get a call from my sales manager that said, we're going to stop originating business.
Oh, no.
Okay, we're going to keep you on payroll. We're going to pay you an average of your last 90 days commission, but you need to not bring in any loans.
Because you guys can't fund. The warehouse lines might have shut down.
Because, we're not sure what the subprime market's going to look like.
Oh, great.
So I was fortunate. So now all of a sudden, I've got competitors starting to go out of business and shut their doors. Loans that are in process aren't getting funded. I was transitioned from Long Beach over to Washington Mutual. So I'm now being transitioned over to be able to go sell Washington Mutual product. I'm going to go from being a subprime account executive, or what they called specialty lending, because it was a fancier name, didn't sound so bad as subprime, to selling their prime products. So we had about 500 salespeople at Long Beach Mortgage. And they kept the name recognition for Long Beach Mortgage. So even though we were the subprime specialty lending division of Washington Mutual, we were called Long Beach Mortgage. They laid off about half the sales force at Long Beach, transitioned the top producers over to Washington Mutual.
Got it.
And as the industry continued to experience problems, we would see a series of layoffs. It got to the point I was the last employee from Long Beach Mortgage at Washington Mutual.
Wow.
So out of 500 salespeople, 499 were gone. I was the last man standing.
Jason was the man, the last one standing.
Last man standing. And, it...
And then when they give you that call, you're like the last guy there. Obviously, the writing's on the wall at that point.
So the writing's on the wall. The market was really gravitating into an FHA market. Washington Mutual didn't do FHA product. So I had a client that was a correspondent client of mine. They'd been asking me for years to come over and become a wholesale account executive, help them grow their wholesale. And at the time, I'm looking at him saying, I'm on the Titanic. Why would I ever leave this unsinkable ship?
Which was WAMU, yeah.
Which was WAMU.
Yeah.
And, I ended up jumping on a lifeboat and going over to my client's office. And literally within a week, it was announced that FSLIC, the Federal Savings and Loan Insurance Company, had taken over Washington Mutual at 4 o'clock on a Friday. And by Monday morning at 8 a.m., Washington Mutual was now JP Morgan Chase. So Chase had acquired them. And thank God, I had literally transitioned to one of my clients, and at the time I had massive negotiating power to come over and kind of head up their wholesale division. Had it been a week later and I'm now unemployed, I would have had zero negotiating and certainly not ended up in the situation that I did.
Wow. And now, just a random thought that I was just thinking about. What's the guy that owns Long Beach? Do you know anything about him, where he's at today, what he's doing?
He was an older guy. He was very, very wealthy. Might not even
be around.
I don't think he's around. He went on to become the ambassador of Portugal or something like that. Just a really...
Because he must have made a crap load of money. But what I was from my experience, me talking to other people, when these companies go down, they basically attack all this personal... Not attack, but... sell essentially to make up for all these losses. So I wonder if this guy still made it out or hid his money or went to Portugal or something. You said
he became the ambassador, the United States ambassador
I don't even know what that means, but
I don't really know.
I don't know either.
He was in an embassy somewhere, I think, but he was a good dude.
Yeah.
And he was a really, really brilliant man. So if I had to put my money on somebody that survived and came out of it, really well. He did okay.
Yeah. Well, yeah, that was a crazy story. And then you made it out. You made it out to
You
your
know, and
client, to your client's company, and you.
Yeah, I went over there. They were a mid-sized banker, California only. It was a great a transitional period. I was given again a lot of flexibility. Brought a couple people from Long Beach over to the company.
You were still originating because I got into loan mods at that time.
I still originated. I mean, at the time, I looked in the mirror and I'm like, is this time to exit the mortgage industry and find something else to do? And one, there was this horrible stigma of anybody that was in the mortgage industry because we were looked at essentially as we single-handedly destroyed the U.S. economy and to a great extent the world economy, which not true. I mean, mortgage brokers were looked at the same way. Look, I went and sold the product I was given the marching orders to sell. My brokers sold it. We did a really, really good job of selling it.
I'm not just going to not make money. Like,
Right.
that's another thing. So I don't know what they're expecting. Like, the
Right.
products on the market, we're going to sell it. Exactly. Like you said, the other guy, there's 10 other people that want to do it.
Right.
Yeah.
And really, it was probably more like 100 other people.
Yeah, or a
that
million
wanted
or
to
whatever,
do it.
1,000, yeah.
But yeah, I mean, we went and sold what we were able to sell, and Wall Street securitized it. You know, really, in my opinion, the source of the bubble and the subprime implosion was Wall Street. You know, there was so much money.
'Cause there was a
was
buyer.
so much greed.
Right.
People were making so much. You know, you rate. So literally, we had pools of second trustees. So we did an 80-20. This was the 20% piece of it. So there's no equity in this to a subprime borrower
Yeah.
with no income documentation, and it's getting AAA rated. It would be the equivalent of saying that's like investing in Amazon or Google.
Like, yeah. Like
But it's secured because now it's secured with real estate. Right, there's no equity in it. The borrower's a ghost.
No, you're not going to get paid if it goes into
Yeah,
foreclosure.
if there's a
equity tanks.
problem, you're not getting paid.
Yeah.
But that's where people would dump $100 million into that and then not get paid. I mean, Bear Stearns, a 100-year-old mortgage brokerage firm, had a pool of subprime mortgages valued at $100 million written down to zero. In the blink of an eye, $100 million turned into nothing overnight.
Yeah.
So a tough time in the marketplace. So I stayed in the business. People still needed to buy houses to a great extent. I think the market was much better then than it has been these last couple of years.
Really?
Because the market crashed. It was like driving a Lamborghini off a cliff. You were going 100 miles an hour.
Yeah.
You flew off the cliff. It ended in a fiery explosion of death. But it was quick. I mean, this all took place in a matter of months. Companies, they had this. Do you remember the implodometer?
Yes.
Okay, so if your company went on the implodometer, that was basically the kiss of death that you're going to go out of business fairly quickly. I mean, the
They still have it today.
Do they?
Yeah.
I didn't know that.
Yeah, they still have
Okay,
it.
I'm going to go check and make sure that Orion Lending's not on the implodometer. If it is,
I'm sure there's some other banks. There's a lot of
I'm looking for a
banking issues right now.
There were, but it was more trying to compete and compressing margins to the point that you're willing to lose money, and you can only lose money for a certain period of time before you run out of money to lose. But the real estate was affordable. People wanted to buy. Interest rates were favorable, so you could still do business back then.
Yeah.
And I still made money. I mean, believe it or not, I still made a lot of money even through that period of time. Transitioning
because I made
from
nothing.
subprime.
But I was a young guy coming into the business, and I was never able to get like a loan officer job. I was always put as like I went from loan mod company to loan mod company and continued to make no money and continued to have these companies shut down and then go try to find another company for years until I got like a W-2 wage job in 2010. Finally, after 2 years of loan mod crap, basically of making nothing. So, but it's surprising that you were still doing well during that time. I mean, somebody had to do well. I'm sure the economy was still moving. People are still buying.
The economy was moving. It was a lot of investors buying. Because now homes that were selling for $400 were being foreclosed on and sold for $185,000.
Yeah.
You know, if we could go back then with what we know now, we'd be retired.
Right.
I wouldn't be a hunting guide, but I'd be hunting all over the world.
And the people that do talk about this, the Instagram gurus, they talk about how they bought up a ton of property.
Oh yeah, because you could buy it at pennies on the dollar. And so we did a lot of financing for those guys that were buying investment properties.
Yeah, and the problem is people are still waiting for that. They think that's going to really happen again when unfortunately, I'm not saying it can't happen, but to that extent, it seems a little ridiculous.
Right, absolutely.
Yeah, so.
Yeah, you've got to go through a cataclysmic economic meltdown to be able to hit
Which
that
was
point.
basically COVID. So how do you compare COVID or does it have, is there any comparison between COVID and 2008?
I would say not COVID. Well, yeah, there was a comparison for me for about 10 days. That was it. That was the extent of my panic
They
mode.
shut off non-QM for a little bit, I
They
think.
shut down non-QM during the COVID period of time. So
Right.
95% of my business was agency, Fannie, Freddie, FHA, and VA.
Mm-hmm.
But where it really hit home, I'll never forget it. It was a Friday in March. So,
March 2020.
yep, March of 2020.
Yeah.
Crazy time. Ironically, here we sit, March 12th, 2024.
Yeah.
When COVID became real, my wife had tickets to take me to a Lakers game on my birthday, March 12th, 2020.
Mm-hmm.
And we get an email on March 11th that says the NBA is now suspending all in-person games.
Yeah,
and
Rudy
we're
Gobert.
suspending season. We don't know what. Yeah, Rudy.
Yeah.
Touching the mic.
Yeah.
I'm like, what is this guy doing? And then it turns out a couple days later he tests positive for COVID. I'm like,
Right.
what an idiot. Mm-hmm. But it was that Friday that I'm getting ready to fund a loan. Standard procedure when we're going to fund a loan.
Agency?
Agent Fannie Mae loan.
Yeah.
Where you call the employer and verify employment the day of funding.
Oh, no. Yeah.
So we call, and I'll never forget it. I'm sitting in my car because I'm still driving around, grinding, still thinking that COVID's going to be okay and I can see clients. And they said, yeah, we called and the borrower's been furloughed. And I literally, I'll never forget it. I'm like, what does it mean to be furloughed?
Yeah.
Well, they're not laid off, but they're not working. I said,
It's like
okay.
a leave of absence kind
So
of.
basically,
Yeah.
the company did what happened to me back in 2007, where I was effectively furloughed. Don't go originate loans. You're going to get paid, but we're going to figure out what the direction of the company is going to be. So it turns out we can't fund the loan. And I remember calling my wife, and I'm like, I don't know what's going to happen. I don't know if I'm going to have a job in a week.
Yeah.
And she's like, okay,
That's
we'll be
fine.
fine.
Yeah, it's crazy.
Don't worry. Don't stress. We're going to be okay.
This is your wife talking?
Yeah.
Yeah, yeah.
And I'm like,
I was thinking,
okay,
yeah.
you're a teacher. Your pay doesn't cover our house payment.
Yeah.
So if I'm out of a job and the world's shut down, I don't know that we're going to be okay.
Yeah.
And it was a very, very quick period of time that all of a sudden the federal government decides to step in and start purchasing mortgage-backed securities, thereby artificially dropping interest rates.
Right.
And now everybody that is working either wants to refinance or buy, and the real estate market took off in 2020 and 2021 were the best volume years of my career. Mm-hmm. So I look back at 2020, and in March, I'm literally almost in panic mode with my wife talking me off the ledge that I think I might be out of work for an unknown period of time and the mortgage industry is going to shut down, to having the best volume year of my career.
That's amazing. Yeah, that's exactly what happened. I mean, it happened to us too, but it was a little different. I mean, I do have some regrets about the whole. First of all, because I thought it was gonna. Oh, this is like 2 weeks. This is like what is this? Like it's a
Right.
This is about to be like we're about to go back to work. It's gonna be nothing.
Right.
Obviously, it ends up being like 2-3 years. But we went heavy on refinances, and it really taught me a lot. It showed me that the refinances are temporary.
Yes.
And I wasn't developing relationships at that time. I still had relationships, so I would get calls all the time. People are trying to buy, but I didn't expand on those relationships like I'm trying to do now. And I think in hindsight, I actually think that COVID actually hurt my business, even though like we did crazy volume, but in the long run, I think it hurt.
I think that
For me specifically, I mean,
I will tell you,
yeah,
you are in the massive majority.
yeah,
But a compliment to you, you're smart enough to see the cause and effect.
yeah,
Because I do a lot of trainings for clients. And one of the questions I get asked regularly, the loan officers that are staying busy right now, because I'll tell you, it has been feast or famine
yeah,
this last 2 years. And 90% of my clients are really struggling and 10% are thriving. Mm-hmm. And so I've been able to really pinpoint what the 10% that are doing well, what they've done. And you hit the nail on the head. You figured it out.
yeah,
When rates are good, loan officers stop calling on realtors. They stop. So you're my client. Realtors are to a great extent your client, as well as the
Right.
borrowers. And if you build that relationship with realtors, you will weather any storm. So what we saw is rates were so low in 2020 and 2021, 90% of loan officers, if not more, stopped working on their relationships with realtors, stopped developing those relationships, and really let those relationships walk out the door.
Right.
So all of a sudden, fast forward to April, May 22, when rates start to skyrocket, now everybody's, refis have effectively been shut off in the blink of an eye. Everybody's trying to develop those realtor relationships. Realtors are now in the best situation ever. They got 50 loan officers coming in trying to buy them Starbucks and buy them lunch.
Yeah.
And they're sending business to the guy that during that COVID era never stopped taking care of them.
Right. No. I learned a lot. I learned a lot. And like I was just saying, I didn't think that it would last this long. Or actually, it's over now. But I didn't think that it would last 3 years. But obviously, we survived it. We completely pivoted. We went directly towards purchases. But I think because we're more of a broker and we're not those refinance shops they're gone.
They got crushed.
Yeah, they did. They got crushed. And I just think that it really helped that we were able. It helped that we were small actually, because we were able to really pivot. The thing is, I ended up losing a ton of money because we spent so much on marketing, and I kept trying to feed it's going to come back. It's keep pumping it,
right.
Keep spending money on marketing, and that's what I realized, that refinances you're just chasing, and it's just a chase, right. And it's not a real. No, it's a real business, but it's just so up and down.
It's totally cyclical.
Yeah, but it's too cyclical where I can't. At our size, I can't afford it because it all comes out of my savings.
Right.
So anyway, I realized that, and it was a good experience. But yeah, it was completely different than. There's some similarities like we just talked about, but it is completely different than 2008.
Yes.
And now I know it was one of my questions I was going to ask, but you kind of briefly touched on it. Is that who are the people that are doing well? And you're saying the people that were working during COVID, basically, or working with relationships.
People that were still hustling with their realtors during COVID.
Right.
Because the refi business, like we said, it's cyclical.
Yeah.
All of a sudden, when rates are at 3%, you've got more clients than you can manage on a daily basis.
Right.
So you don't have time to go out and meet your realtor for lunch and figure out what they need. And, you're not necessarily prioritizing, I won't say you in particular, but loan officers aren't prioritizing that purchase business.
Yep.
Turn times were strained. My turn times right now, I review things, I underwrite a file in 24 hours, sometimes same day.
Mm-hmm.
I was at 30 days during COVID.
Oh, yeah.
It was insane. We would prioritize purchases. Refis had to go through that time period.
You're not going to get the business then, obviously.
But we still couldn't, even prioritizing purchases. We were a week out. And I think that the realtors, and not everybody prioritized purchases. We did, because we knew that when business turned, if we didn't take care of those purchase brokers and those purchase realtors, and they had a bad taste in their mouth because Orion burned them on deals and couldn't close on time, and people ended up with per diems, we tried to do the best we could to manage and focus on the purchase business. But the loan officers that are thriving in this market, mm-hmm. and people are still doing great. I've got a client I was on the phone with this morning. They have 60 files in escrow because they focus on the purchases. They never varied from it. That's who's busy.
Yeah. And in terms of the people that are busy, what products are they selling? What are you kind of seeing on the market right now? Top mortgage companies?
It's a mix of everything. A lot of just conventional and FHA. It's a lot of agency business. It's knowing how to structure the non-QM so that they don't let any of the borrowers slip away. Really, there's a loan for just about every buyer in today's market. As long as you didn't come out of foreclosure or bankruptcy last week, there's a program for you.
Yeah.
But it's knowing who to go to for the right program. Not everybody's good at everything. I'd like to. I'm very biased. We're really good at doing just about everything. But there are programs that you get somebody that's less than a year seasoning on a bankruptcy or foreclosure. I'm not your guy.
Yeah.
I don't have that product for you. But they know who to go to for that product.
Yeah, and I know me and you, we talked a little bit on the Zoom about the down payment assistance. I don't know if you want to just brush on that, because a lot of loan officers don't like to sell it because there's a stigma about down payment assistance that, a loan officer would make less money and it would take longer to close and it would just be more difficult. So if you could talk a little bit about that product, you guys, because I think It is a proprietary product.
Yeah,
right?
We've got our own proprietary product. I won't say we didn't like down payment assistance, but we really didn't like the process for down payment assistance.
Mm-hmm.
It was cumbersome. It was delayed. It had a negative connotation in the marketplace. Everything you just said.
Yeah.
So we said, we're going to roll it out. And if we roll it out, we really want to do it the right way. We want to leverage technology. We want to make it seamless. We want to integrate it. We don't want to have, city, county, state partners that we have to subject ourselves to reviewing files and delaying things.
Mm-hmm.
So we've rolled out some really aggressive proprietary product. It's FHA and USDA driven on the first trust deed. We've got forgivable and repayable seconds. It allows us to really make homeownership affordable and available to somebody that doesn't have their down payment. And we see a lot of people end up in a situation unexpectedly where they're getting evicted, they're getting kicked out of their house because rents have gone through the roof and they've been there forever, and the landlord wants to, kick them out and jack rents up significantly. So for a variety of reasons. And we lend on this program nationwide. Not every market is similar to the Southern California market. But I would say for the LOs that shy away from the DPA, it's really a product that you need to have in the arsenal. Regardless of the market, regardless of the conditions and interest rates, DPA is a viable product. Consumers love it. The consumer's perception is that they're going to get something for free with a down payment assistance product. It's not necessarily true. There are certain advantages to utilizing the DPA, but it opens up a path to home ownership for somebody that otherwise wouldn't be able to buy a house, at least in this reasonable timeline.
And this is actually some mortgage question about your product, but in terms of streamlining, because actually I have a client right now that is ready to, we're debating, actually I have two that are debating using it because we have to, the thing is he works for Albertsons.
Okay.
And he said he has to go in front of some type of board to ask the board to take out money from his 401k as a hardship, as a hardship, or really it's for the house. So he really doesn't want to do that. So we're looking at the down payment assistance. And my question is, can he do a streamline after that down payment? Like I forget what you prefer, the Boost or the Aurora, right?
Yes,
those are the two. We're looking at the Aurora because I believe it's priced better. So we're looking at that one, right? Yeah.
So great question.
Because we want to get, we don't want to stay in the higher rate.
It's a path to get him in.
Yeah.
It does come at a higher interest rate. You want to get him out of it as soon as possible.
Right.
So the challenge with it is we will not subordinate the second for 36 months.
Okay.
So from a streamlined perspective, he'd be locked into the loan for 36 months. Now, what I would say a better strategy is, so HUD's got a unique guideline. So you can pay off an FHA loan. You can do an FHA to FHA streamline. It's got to be 6 payments, 210 days from the note date. They've got a unique guide when when you've got an existing FHA with a purchase money second. Now they won't do an FHA to FHA for 12 months. So I would say if the guy wants to get in without going in front of the board, which seems like it would be crazy that he has to go in front of the board in the first place, but
yeah, that's what he told
companies do what they do.
Yeah.
FHA will allow him to do a rate and term refinance after 12 months. So an FHA rate and term refinance goes to a 97.75% LTV. It goes above the 96.5%.
You should have
enough
enough by then after a year, yeah.
Right. We need nominal appreciation for him to be able to go ahead and do a rate and term refinance and pay off that first and second after 12 months. And I think that's probably a better strategy. And, we saw a CPI number come out this morning. It was a little bit higher than the forecast, which is having it's already, the market was already off.
The market,
Yeah, it was already off a quarter of a point when we sat down this morning. Mm-hmm. So there's no question, I don't think, that rates are going to come down. It's going to come down at some point this year. They're targeting like May, June. We've got the election that's going to put some wind at our backs and give us some favorable pricing.
May's coming up, so I'm
Absolutely.
waiting.
I'm waiting for May also.
Yeah.
I got a big trip in May.
Yeah.
But I think that 12-month window of time may actually put him on a better time horizon to be able to capitalize on that interest rate reduction. But I wouldn't let it discourage him from taking the DPA. You're not going to be able to streamline in 6 months, but you're going to be in a position to do something in 12 months.
Okay, cool. Actually, I didn't know that. So yeah, after 12 months, we could refinance as a rate and term on a purchase money second.
Yes.
So yeah, I think I'll talk to him after we kind of get out of this podcast. Well, last night we kind of discussed a lot, and we talked about everything. And the most fun thing I want to talk about now is the trip, man. So yes. Jason's going on a trip, I guess, in less than 60 days. You're going to Alaska. You just told me a little bit about it. I know it has doesn't have too much to do with obviously real estate or anything like that, but it's a cool topic. And we're human too. We don't just work. So we have fun too. So he's going hunting in Alaska. So tell me about this Alaskan trip. Obviously going back to the home. I don't know if you're going home or I don't know if your dad still lives there. If your dad's still around.
My dad passed away quite a while ago. But, I love going back up there. Love taking the kids up there. Love to get up there and fish. It's beautiful country. I mean, if you've never been there, you definitely want to go. Yeah. In the summer. Yeah. Don't go in the winter. Yeah. But heading back up to Alaska. I'm going to Kodiak Island on a hunting trip. So, growing up, spending a lot of time in Alaska, you grow up hunting, you grow up fishing. Yeah. Not real popular hobbies to have here in Southern California, but a huge passion of mine. My kids do it. Kids do it with me.
Your kids are college age kids, right?
College age. Our youngest is 17. We've got one that is, our oldest is 31. She'll be 32 this year. Okay. So real proud of the kids. But yeah, they've all gone on hunting trips. It's a couple of them. The boys have all been up to Alaska on fishing trips with me. None of them are as passionate. I'm trying to book a 10-day fishing trip.
Because you're from there. They're born in where they're raised in California.
They're all California kids.
Okay, yeah, that's why. Yeah.
Yes. So it's a trip that I've dreamed about my whole life. So I'm going to go hunt.
You never. Okay, go ahead. Yeah.
Yeah, I'm going to go hunt bears on Kodiak Island. Holy hell. Largest land predators on Earth.
Yeah.
And it's.
I looked up that bear after, dude. That bear is huge.
They're massive.
What are you going to do with this bear? I was asking you, what the hell are you going to do with this bear after we kill it in like the forest or whatnot? Obviously. I was thinking you can't kill too many of these. There's no way.
Well, it's an isolated population, and so
it's an actual island, or is it a peninsula?
No, it's literally an island. I'm going to hunt on Kodiak Island.
And how the hell did they get there? Were they like brought in from another? They're just from there.
I don't know. I don't know how
they're
they
native
ended up
species,
there.
is what I'm saying.
Yeah, they're a native species to the island, and they have evolved to where. If you've looked at the pictures, the Kodiak bear has the largest skull of all brown bears. Huge. You see guys that are hunting and they're holding the head, and the head is wider than their torso.
Oh yeah.
These bears are massive. A big bear squares out at 10 feet. So 10 feet, top to bottom and side to side. They take the hide and measure it, and if the average is over 10 feet, you've got a legitimate trophy monstrous bear. So my wife, I came home from a fishing trip, and I'm like, I got this crazy idea. I want to go hunt Kodiak bears. And I figured she would say no. And she said yes.
So she's coming?
Oh, she's not coming. Hell no. I was like, what? She's not coming with me. But I wanted her buy-in because one, it's an expensive trip. This is the longest I will have ever been away from home. It's a 10-day hunt, takes a couple days to get there to the lodge, takes a couple days to get home. So realistically, I could be out for 14 or 15 days.
Oh, wow. Okay, this is a long trip.
Yeah. And so we watched this
and you're spending the night out like in the wilderness kind
of
thing?
So this is where she drew the line.
Yeah, okay.
So, this is actually a really funny story. Okay. So as I started doing research on hunting bears on Kodiak Island, one, you've got to put in and it takes years to be able to get the opportunity to do this. So this conversation was happening in 2021. And I said, all right, and check this out. There's this show on the History Channel that is featured Kodiak bear hunting guides. Mm-hmm. So I'm like, why don't we watch it? And you'll have a little bit of an appreciation for what it is I want to do. So literally it shows this one guy, and he's wrapping this wire around trees around their tent and hooking it up to a car battery. And it's a guide and a hunter. And the hunter is like, hey, what's this? And he's like, well, this is what will
keep the bears away.
Deter the bears from coming into our camp. Uh-huh. And I'll never forget it. We're sitting on the couch. My wife looks at me and she's like, this guy's trusting his life to a car battery. She's like, okay, I'm on board with you going, but you have to find somewhere to stay where you're not sleeping in the exact area that you're hunting these massive bears.
Right.
So I do some research and I find a guy that actually has a lodge-based hunt. And it turns out he's Native American, like third or fourth generation Native American. They hunt based out of a lodge. And what's cool about this hunt, because he's Native American, they've got a certain allocation of guaranteed tags. So instead of me needing to go into a lottery system where I'm training and preparing to go on this hunt for years, waiting to see if I get drawn, I've got a guaranteed tag, but they're booked years in advance. So I booked the trip in 2021 to be able to hunt the spring of 24. So the hunt will entail basically leaving the lodge, jumping on a boat, and going out, parking the boat somewhere, and then you hike in, based on whatever your physical level is. You hike in, you look for bears through binoculars and spotting scopes. You find a big trophy shootable bear, and then you turn the tables and you go stalk the bear.
Oh my
in
God.
their
Okay.
native environment.
Holy hell.
So
these are like giant rifles you're using? I mean, I'm not really familiar with guns.
Yes. So I'm using a pretty high caliber rifle that's made for this type of game. It's made for dangerous game.
Yeah.
So it's a caliber, it's a 375 H&H Magnum, which not being a hunter probably doesn't mean much.
I know 375, but that's about it.
Yes. So to put it in perspective, I was just out at the range. I have a membership at a private range out close to where I live. And I got a good buddy of mine who just retired from the Department of Corrections. He ran the armory and certified all the prison guards for their shooting. So he probably has forgotten more about guns than I've ever known. So we were out at the range, and he brings a bowling pin. And I said, well, we're going to shoot the bowling pin? Yeah. I'm like, okay. He said, yeah, I can normally get about 400 rounds through the bowling pin before it starts to deteriorate a little bit, and I'll switch to a new bowling pin. And I took the first shot with my rifle I'm going to take up to Kodiak, and it literally blew the bowling pin up. Bullet went direct all the way through the pin.
Oh, yeah.
And he looked at me, and this was at about 80 yards. He looked at me, and he was like, what the hell are you shooting?
Yeah.
Which honestly made me feel better, because I watch these videos and literally guys will end up shooting the bear 3, 4, 5 times before they put it down with this caliber of rifle. So
with your caliber?
Yes. So
they don't go down with this.
Sometimes they go down with the first shot, but it's got to be really, really good shot placement. And I can sit at the range without having a bear looking at me, and I can put my bullet on target really well. It's a different animal when you've hiked up. And
you're tired, you're nervous. I think you're a little nervous.
Yeah. And you're looking at the world's largest land predator that's looking back at you potentially. Yeah. And it was a little unsettling. So bought a new rifle for the trip, bought a new scope, contact the outfitter. And I said, hey, I'm going to sight my scope in. What distance is your average shot? Because I want to make sure that I'm really proficient in that range. I'm hoping he's going to say, well, like 200 yards.
Yeah.
50 to 80 yards.
Yeah. Wow.
So I'm going to be 50 to 80 yards away from this animal when I'm hunting it. Really hoping it has no idea that I'm there so I can take my time and get set up.
Yeah. But, you're hunting anything else when you're out there, or just
no? That's just the bear.
And ducks.
Yeah, you could go different time of year and do a multiple species hunt, but I didn't want to be. I wanted to be focused. I mean, it's an expensive hunt. I didn't want to come home empty-handed. I'm focusing all 10 days on shooting a big bear.
These bears, they eat seals, right?
They eat everything.
Seals, there's walruses up there, no?
Whales.
Oh, yeah,
I mean, if
a
whale dies and washes up on shore, a seal dies and ends up on shore. I mean, they're not like polar bears where they're going to be out there trying to hunt seals. But a big part of their diet is other bears.
So are they smaller bears, I would think? The same species?
Same species. The big bears eat the little bears. The big brown bears will eat the black bears. And
I know the black ones are smaller.
A part of the conservation. So Kodiak has really become the model for isolated species management, because there's X number of bears on the island. Right. Now, there are a couple other...
That's why I'm surprised they're letting you go shoot one.
Well, it's very restricted on the number of permits that are given on an annual basis. You can't shoot a sow, which is a female that has cubs with her. They discourage you from shooting sows. And really, once the bears get to be an old age, when a sow has cubs, they'll usually have 1 to 3 cubs. they stay with her for a couple years. If a sow has cubs, she doesn't go back into heat.
Ever?
Well, when she has the cubs. Once the cubs are gone, then the sows will go back into heat.
Yeah.
So you talk about these animals understanding just the life cycle and natural selection. The old boars understand that if they see a sow with cubs, she's not going to go into heat. So the boars will kill the cubs, which
Right.
A bear
seen that,
cub
yeah.
has a greater probability of dying from another bear than from a hunter
Right.
on the island.
Yeah.
So they want you to go kill these old, nasty boars
yeah.
that are killing these cubs.
Yeah. Okay. Wow. And I know you had this when we were on the video. What animal was that behind you? You killed
on my desk. It's an aoudad.
an aoudad. I couldn't think of the name.
Yes.
And you were saying it was brought in from North.
So the aoudad is a North African bighorn sheep. So, you talk about you asked me, like, what would I do outside the mortgage business? The mortgage business has afforded me and my family opportunities that I could only dream of.
Right.
So William Randolph Hearst, the publishing magnate from back in the early 1900s, built the Hearst Castle, which is now a state park in California. But back then, he was a very eccentric, weird dude and built a zoo. So he imported animals from all over the world to his zoo. One of the animals that they brought in was the North African bighorn sheep, which is an aoudad. And they had a fire at the castle, and it burnt down the enclosures. So 8 aoudad escaped in the early 1920s. Now here we are in 2024. So 100 years ago, that population has grown to about 350 animals that lives primarily on private land on the central coast of California. And I've got a guide and an outfitter and a taxidermist. In fact, it's the taxidermist that my bear is going to be shipped to from Kodiak, who developed a relationship with the Hearst family. And so he has access to hunt land, the Hearst property. So the Hearst family gave the castle to the state of California. But they still own thousands of acres on the central coast. And those aoudad range on the Hearst land and down on another private ranch that my buddy has access to hunt.
Yeah.
So he will take 3 rams a year. That's it. And that's how they manage the population. You can only take a very fixed number of animals. So I got on the list. And
nice.
A lot of these hunting trips, it takes years of preparation and timing and waiting to be able to get your number called. But went up, took my wife on the hunt. She never lets me forget it. She's the one that spotted this herd of animals. And I used the term stalked. We stalked up within about 240 yards of them.
That's far.
And waited until we looked at all the big males in the herd, because it's weird. The aoudad, the females have horns also. So they don't, usually you see in a population, like you're going to go sheep hunting, the bighorn sheep, the males have horns, the females don't. Well, in this one, the females have horns also. So you really, you're looking at probably 80 animals and trying to find the one that's got the biggest horns.
Oh, you found a big herd.
We found a big. They're a herd animal, which makes it even harder to hunt, because instead of having 2 or 4 eyes that you have to hide from, if there were 80, we got 160 eyeballs trying to look for predators.
Right, and you're far.
Yeah,
240 yards is a good distance.
It's a very makeable shot. Very reasonable shot.
I mean, I golf, so I know how far. I literally was just golfing 240 yards is a pretty good shot.
Yeah. Yes. So we ended up creeping up, finding the right animal. I laid out in the prone position for probably about an hour and 15 minutes, trying not to move, looking through my scope, just looking at all the different animals, trying to find the right one in this group, making sure the right one was in this group. Because when you measure an aoudad, you want to shoot one that's got a 30-inch curl on its horn. That in California, that's a big trophy animal.
Yeah.
So I really wanted to.
Also means they're older. They're probably ready to go.
Yes. Yeah. You want to let the young ones perpetuate the population. Right. So found the right animal.
Wow.
Waited until he put himself in the right position. I had a nice broadside shot and one shot.
Let him rip, baby.
Yep.
Oh,
we went hot.
Damn.
And what's funny is...
Dropped in one shot, right?
Yes, sir.
Wow.
Yep. Nice, clean shot. Dropped it. and it
And
fell.
how big are these things?
Oh my
These,
God, they're massive.
Yeah, he looked huge.
They estimated about 285 pounds. So the head is big, the horns are huge, but the body is massive. I mean, compared to a deer, most deer, I mean, the body is enormous. We cleaned it. I took it to my butcher shop, and we took in almost 140 pounds, which, I mean, you harvest a lot of meat from those animals because you figure you got a lot of bones, organs, blood that goes into the total weight, total body size.
Right.
We ended up with a lot of meat. But it fell in a ravine. So
Oh no.
we're looking, we couldn't find it.
Yeah.
And I'm like, man, that thing dropped. Like there was no question in my mind. It was killed. Worried about all the PETA viewers of your podcast. But
don't worry about them.
No, I mean, it's like I hit it hard. I dropped it. Like it cartwheeled once, and
because they live on cliffs, right?
Yeah, they live in they're like bighorn sheep. They're looking for the gnarliest. That's why they've been able to survive, and all of the other animals that escaped from the ranch haven't, because they go live in the most crazy terrain. Because they're on the Central Coast where you've got coyotes, bobcats, mountain lions. A lot of predators.
But they're literally bigger than all these.
Oh, they're bigger than all of them. Absolutely.
Yeah.
And they're in a herd, which allows them to be a little bit more evasive. Yeah. And they go into an area where it's hard to get to. I mean, we went in a Jeep.
What were the other animals that died? I'm just curious. Really, I don't know if you know any of the animals.
They had a tar was the big one. They had what is it?
In the Hearst family zoo, basically.
Yeah. I mean, probably a lot of them were never going to survive in the first. They probably didn't last more than a few weeks, but they say that the tar, which is
what's a tar?
Like a New Zealand, they're native to New Zealand. It's another type of a mountain goat or mountain sheep. I've never hunted them, never even looked into it. But they say that they made it into. They think the last one died within the last 5 years.
Oh wow!
But yeah, the Aoudad, their population is strong. I mean,
That's cool.
A lot of them.
Yeah. So it fell into a ravine. What happened to the?
Yeah, it fell into a ravine. So we ended up finding it, and then we had to drag it out of the ravine. It was, then you realize it's a big animal.
That must be a process just by itself.
Oh, it's a big process getting it out, getting. We're on a really.
How are you taking
slope.
it from not even the ravine? You bring it up. How do you take what? I literally have no. Oh, you probably throw it in the truck.
Yeah. So we were fortunate.
Yeah.
That there was a road not too far from where we killed it.
Oh, okay.
So, but the bummer was the road was uphill from where we killed it.
Okay.
So we field dressed it, which was take all the organs and blood out, bleed it out right there. And that dropped a significant amount of weight. And then we drug it up the mountain, over the peak, and then down to the road, and then hiked back to where we had the vehicle, drove back to where the animal was. So,
wow.
It's an adventure.
That is an adventure.
That's what I look forward to on this Kodiak bear hunt. I mean, it's like I want to harvest the bear, but you hunt, the bears are active at sunrise and sunset. Sunrise up at that time of year in May in Alaska is going to be around 6 a.m. down on Kodiak. Sunset is at 11 p.m. So I'm going to be out. And you can do it the easy way, which is they take you out on the boat. You look for bears from the boat. Maybe you see one, maybe you don't. If you see one, you're getting the dumb ones that are going to come down to the ocean. You want to go shoot a trophy, you go where the trophies are, which is going to be up the steep, rugged, really brutal terrain. And
why are you saying that though? Like, what kind of bears go to the water? Like the dumb ones? Like
the dumb, smaller ones, the younger ones.
Well, the ones you're not supposed to kill, basically.
Well, you could still, like some of them you could hunt. I mean, let's say you see an 8-foot bear. Somebody will shoot that 8-foot bear from a boat, or take the boat a half a mile up the ocean and drop out and come back in and hunt it. But it's like I want to really get after it. So we'll beach the boat at probably 6:30 a.m. Hike in. Maybe we go in before. I don't know. I'll find a lot of this out once I get up to Kodiak.
Yeah, but it's gonna be nice to talk to you after you get back.
We should do a podcast when I get back.
Yeah, we'll do the second version.
Stories. Yeah. So then it's it's finding the bear, then it's getting to the bear without it getting wind of you.
50 to 80 yards.
Putting a shot on the bear, and then cleaning it, packing it out, and you might be a mile from the boat. My mindset is to be prepared to go 5 to 8 miles every day from the boat which means then you got to pack it out.
And there's no cars here.
There's no cars. There's no roads. There's no trails.
So how are we getting this 600-pound bear or 800-pound bear or whatever the hell it's
You take the hide, you take the skull, and you pack out whatever meat you can pack.
Oh, okay. Okay.
And they say that whatever part of the carcass is left behind
Yeah.
will be picked clean within 24 hours by all of the other animals and bears.
Oh, it's gone. Yeah. Yeah. Wow. Yeah, this is going to be an interesting story when you get back. And then you're going to eventually put it, I'm sure, on your wall like the other one.
Oh, yeah.
You probably have a special place for this one.
I'm going to do a full body
Because this is
mount.
once a year. What's this, like once in a lifetime? Or, I mean, or you can probably go back. But.
You can go back. You can only shoot a bear once every 4 years. So that's another factor to manage the population, because if you had the resources, one, it's expensive, but if you had the resources to go, they still limit how often you can go. So as I talked to the outfitter, I said, this is my once in a lifetime hunt. And he kind of laughed and he said, do you know how many people I've had as repeat customers that said this was a once in a lifetime hunt?
Is that much of a rush, huh? They just got to go back.
Yeah. Well, they say that Kodiak bear hunting is 90% boredom and 10% sheer terror. Because it's a lot of just looking through binoculars, trying to find the bear, then trying to hike up and get to it. And then by the time you get to it, I think that's where the terror comes in.
Oh, yeah. Aren't you not used to it? You're from Alaska. You've seen black bears all... No, haven't you?
I never saw a bear when I was up there.
Really?
I've seen bears since on fishing trips going back. But when I lived up there, I was in proximity to bears. I would see prints. I was on a fishing trip once, a canoe trip, and we pulled up on a bank, and there was about a 40-pound king salmon with a claw mark down the side of it steaming. So we had probably scared the bear when the canoes hit the rocky sandbar.
Oh, wow. Okay.
But never saw one. And then I did a trip 2 years ago with two of our boys. And we ended up fishing in a spot from a boat where there were 5 brown bears.
Oh, okay.
And they're big. And it was like for the first 15 minutes, like you're kind of fishing and you're just locked on the bears. And then you start, you realize they're fishing. We're fishing. Yeah. They're eating salmon. We're catching salmon.
They're used to humans a little bit.
They have no interest. They're there to eat salmon. They couldn't care less what we're doing.
They know you're not
20 yards away
or whatnot. But I know obviously we've heard of the attacks. They tell you not to climb a tree with a bear. That you're supposed to play dead.
That's a black bear. Brown bears. Really have no. There's no good exit strategy. Bears? Brown bears are gonna probably attack you. Like if you end up in that situation,
you can climb a tree, I guess, but they can climb.
They can climb. Here's the thing: they can run faster than you can run. They swim faster than you swim, and they climb faster than you climb. So you hope you make the right shot. You get a good shot placement, and you don't end up with a problem on your hands.
Yeah, I'm sure that's the big thing your wife's concerned about, the problem on your hands.
Yes.
So.
Yes.
But it should be a good story. Well, anyway. I guess we could kind of end it right there, man. I really appreciate it. You gave us a lot of your time. I know you got clients to go meet and deals to close and things like that. But yeah, I'm looking forward to hearing the second part of this story. Either we'll call you or we'll do another podcast. Hell.
Well, my daughter asked me to videotape, just take videos on my iPhone.
Oh,
and
okay.
She's like, so I have an album on my iPhone with all the little videos of me training and shooting and my gear.
Yeah.
And then I'll do the same as I get up there. And she's going to take all of those little 15 or 20 second snippets and put a video together for me. So
okay, cool. Yeah.
I'm pumped for that. That's going to be
looking forward to that
a really cool way to document this whole journey.
Seeing this giant bear. Is this like by yourself or are you going with like a group of people? No, I'm talking about like hunters. Are you the only hunter?
There are 3 hunters that are going to be in the lodge. I will be hunting with my guide and my packer. By
yourself, just you two?
By myself. Because they said most of the hunters will glass, which is what you kind of refer to, like looking through the binoculars. They'll glass from the boat. And when they see a bear, they'll go after it.
You're trying to really, you just talked about.
Yeah. They said that, they said, what, the guides are going to really appreciate the fact that you want to beach the boat and go to the bears.
Yeah.
Because we're really going to hunt.
Yeah.
So, it'll be myself and the guide or myself and the guide and the packer. There'll either be 2 or 3 of us.
Well, dang.
Walking the mountains.
Anyway, man, appreciate all the stories. Appreciate your time and,
No, it's been fun and exciting, and I look forward to
the next one,
connecting again.
Thank you for being here. And thanks, everybody, for tuning in. Jason from Orion Lending, thank you so much.
You got it.
Peace.